Traders about the USD. So this was a very big week for the US dollar because on Wednesday the Federal Reserve announced they were going to start tapering this round of quantitative easing on about 15, no, exactly $15 billion per, right? So this is bullish for the currency. But let's have a look at what happened on a Friday. So on Friday we had non-farm payrolls, and there was a big beat in job numbers. Right? 531,000 jobs were added in October, with a previous number of 194,000. But if we look at the average hourly earnings, the average hourly average the average hourly earnings month over month disappointed, right? While the unemployment rate also beat previous numbers. I'm always looking at the average hourly earnings because to me it doesn't matter if we get more jobs added to the economy whilst the average hourly earnings are decreasing because um, with the current rise in inflation, wages being so low are not going to be sustainable. And let's go to the chart and let's see what happened on a Friday. So let's start by looking at the daily chart. So this level on the DXY, this is the US dollar currency index, 94.60 to 94.70 level is quite the big level. I've been talking about this level for a while, because this level is the pandemic lows right here. Well, not the pandemic lows, but right here on March 2020 when the pandemic hit the markets or hit the world actually. And well, then we had that spike, of course, and when the Federal Reserve started this massive round of quantitative easing, of course, the value of the US dollar decreased. But what's important to notice here is that when price broke with this level, right? Well, and when it retested this level, we saw a depreciation on the USD of about, let's call it a 6%, 5.9%, right? And we hadn't been we hadn't seen this level being traded since September, at the end of the September 2020, right? So this is the daily chart on DXY. I just wanted to show you that level and why that level is massive. So let's go to the 4 hour chart and let's have a look at what's going on. So if you notice, right, this pink reddish dotted line on my chart is the previous month highs, right? So October highs and the September highs are basically at the same level, right? Again, you could say that October highs printed a new high, and last Friday printed a new high. But again, levels are zones; they're not actual lines on your chart. So to me, we've had flat tops for the past six, 5 to 6 weeks worth of trading, right? Now, this is the 4 hour chart, and of course, that while saying this, I'm not saying that I'm looking for shorts on the USD at all. Why? Because if we zoom out on this chart, you can see that from the lows, at the end of May 2021, we have been trading, or DXY has been trading in a extremely bullish structure, and it is a very structurable, right? So let's just see how much the USD or the DXY has appreciated, about 5.67%. So basically, it has erased all the losses that we saw from that um, uh, retest on September 2020, right? So what for next week? What I'm looking at on the USD, of course, I'm looking for buys on the USD, right? So, and I have a bullish plan and a bearish plan. What I like about the upside is this level right here, the 92.20 to 90, I'm sorry, 94.20 to 94.30 level. This level has been pivotal in the past. This is the 1 hour chart. So right now we're talking about the shorter term, the immediate term, DXY trading, and it has been pivotal, right? Again, support and resistance or key levels are zones. So basically, my make it or break it level for bulls is between 91, 94.10 to 94.27, 70, right? Let me just delete all of these things that I have here. So basically, what I'm saying is this: on Sunday, for you guys, it might be Monday. For me, it's Sunday. When the market opens, I'm going to see how the US dollar opens, and if we get a bullish open, then my idea for longs on the USD is going to be valid. But if DXY or the USD uh, pullbacks below the 94.10 level, then I really think that shorts should be in play. Now, again, remember that even though uh, the Federal Reserve announced uh, the start of, the tapering of this round of QE, and a bit in job numbers. You have to trade what you've seen or what you think is going to happen based on fundamentals, right? Because right now we're talking about the short term. So the structure or the immediate structure in this market is also quite bullish, right? So basically, I could see a drop to a real retest of the 94.10 to 94.15 level. And here is where I would look for some kind of reversal pattern to start looking for buys on the US dollar. But if this fails, um, the break and retest would be where I would look for shorts on the USD. Now, the market that I will play this on, I pound a US dollar, right? I like, the pound US dollar. Let's talk about this because on Thursday, you know, the Bank of England came out extremely dovish after weeks of extremely hawkish language. So that was kind of a disappointment. I and I mean, even if the Bank of England would have raised interest rates by 15 base points, that wouldn't have been a surprise to the markets because uh, how hawkish Bailey's speech had been in the past. Right. So let's talk about this. Because of Thursday, uh, how dovish the Bank of England came out, the pound crashed, right? Breaking with some massive levels. A bullish play on the US dollar would be actually extremely good to play it on the pound versus the US dollar. Because on one side we have a weak pound, and on the other side we could have a strong US dollar, which means that this market would have double the bearish pressure. So levels to possibly play this. Let's look at the 4 hour chart. Levels to possibly play this. I think I would be very comfortable with shorts on a bullish continuation on the USD, of course. at a retest of the 135.50 or so of the pound versus the US dollar. If that, I mean, if the US dollar really opens very bullish, um, uh, I would look for shorts at the break of Friday's lows. Now, be aware of this candle. Friday's candle was and is very, I mean, in my opinion, very bullish, right? More so because it shows rejection at a massive level. But again, we don't know what's going to happen. What we can do is only plan for possible scenarios. So, if we get a pullback to that 135.50 and a clean rejection whilst the US dollar is rallying, this will be my play. Right? So, thank you. And Geoff,